Virtual currencies are meant to act as a type of money that can be traded on online exchanges for conventional currencies, such as dollars, or used to purchase goods or services predominantly online. It's also important to note that the technology innovation and ideas underlying these markets present significant positive potential.
Virtual currencies, Bitcoin specifically, have captured the attention of investors and speculators and computer programmers and regulators all over the world. I don't know how many people imagined how quickly and broadly Bitcoin and the technology it's based on would spread. It's nothing short. To most of us, it's nothing short of remarkable. To be sure, it's critical for our regulators to understand innovation and technology so that markets can grow and evolve while investors and consumers are protected. Bitcoin's 1,000% rise last year and 60% decline last month makes yesterday's Dow Jones record point drop look almost like a rounding error. It's clear that virtual currencies bring us into a new age, but that doesn't mean we overlook the basic principles of going after the bad guys and being tough when they are repeat offenders.
A promising new technology referred to as distributed ledger technology or blockchain. Proponents of this technology assert that it will bring great efficiencies to our national and global economies, including our capital markets. I hope that it does. And the Commission looks forward to working with market participants who seek to bring efficiencies, including more effective oversight, to our markets.
I'd like to begin briefly with a slightly different perspective, and that is as a dad. I'm the father of 3 college-age children, a senior, a junior, and a freshman. During their high school years, we tried to interest them in financial markets. My wife and I set up small brokerage accounts with a few $100s that they could use to buy stocks. Yet other than my youngest son, who owns shares in a video game company, we haven't been able to pique their interest in the stock market. I guess they're not much different than most kids their age. Well, something changed in the last year. Suddenly, they were all talking about Bitcoin. They were asking me what I thought and should they buy it. One of their older cousins, who owns Bitcoin, was telling them about it, and they got all excited. And I imagine that maybe members of this committee may have had some similar experiences in your own families of late. It strikes me that we owe it to this new generation to respect their enthusiasm about virtual currencies with a thoughtful and balanced response, not a dismissive one. It's important to remember that if there were no Bitcoin, there would be no distributed ledger technology. It grew out of that technology initiative. And the potential applications, and by the way, I'm no pie-in-the-sky dreamer. I just report what I read, but the applications range from enormous potential in financial services industry and the banking industry, but right down to the way charity dollars are spent, the way perhaps refugees are accounted for across the globe. There was an article just this morning about the use of distributed ledger technology for 2.5 billion people around the world who don't have access to banking services. One of the areas that, in our own area of agriculture futures, 66 million tons of American soybeans were just handled through a blockchain transaction by the Dreyfus Company for sale to China. So Bitcoin is now being used. It's used in our American transportation and logistics system. Distributed ledger technology has got an enormous potential. Now, how it will be realized, when it will be realized, what are the other challenges in it, those we can't say, but the potential seems extraordinary.
Thank you. Mr. Clayton?
I agree that the potential seems very significant. And just look around anywhere in our economy where verification and record keeping has cost that is potentially reduced is an opportunity for this technology. That's just one of them, and I hope people pursue it vigorously.
You do need more personnel, but very specifically, do you have the technologists, the computer experts that can begin to understand how these cryptocurrencies work, the cryptologist, and not just to sort of on a day-to-day basis sort of, give you the temperature, but look ahead and say, this is the direction it's going, which could have very significant deleterious effects. Do you have anyone like that on the staff?
The answer to your question is, we formed a cryptocurrency working group, a cyber group. They've done an exceptional job. getting up to speed on this in a short amount of time and identifying some of the very issues you talk about. In an emerging area like this, could you use more horsepower? Always. You make a very good point, Senator, on looking out across the international nature of this and trying to understand where it's going to land, and do the things that people say add up. That is a very important.
Where are the technologists located? If you don't have them, I presume you don't. Is it?
We have what I would say it's a combination of economists and technologists. It's a question of, here's what the technology is, and does it make economic sense? We have those people in our economics division, DERA, and we also have some of them in enforcement, and they work together.
But you need more. Yeah, I'll take that as a yes. Mr. Giancarlo, same question. Do you have the technologists? Are you working together?
Thank you, Senator Reid. We've done a couple of things in 2017 to, as Senator Brown said, to get ahead of the curve. We hired the agency's first ever Chief Innovation Officer, someone who comes with a deep background in a lot of these new financial technology innovations. We also created something called Lab CFTC, which is our innovation hub. And you asked, where's it located? It's actually located in New York City because so much of this innovation is taking place there. We wanted to be close to these innovators to learn from them. But in terms of protecting consumers, we also formed a virtual currency enforcement task force. It was actually that task force that recently brought 3 civil actions against Bitcoin fraudsters. And as I said in my testimony, there's more to come. And as to the resource questions, we do need more resource.
Senator Warner.
I usually agree with my friend from Louisiana, but I think we may be on top of something that is transformational, and I don't think you can separate the underlying distributed ledger or blockchain from some of these crypto assets. And if we had the same rate of increase that the next 2 years that we've had the last couple of years, we're talking now a couple $100 billion, we'd be at north of $20 trillion caught up in this area by 2020. I remember back, I was lucky enough to get in the cell phone business back in the early 80s, and everybody thought it was going to be a small business, and they were wrong, and I got rich. I think we're looking at the same kind of transformation about to take place, and we are going to have to wrap our arms around it.
From our point of view, when it's used as a store of value, then it's very much like an asset, like a commodity. And in fact, what we hear a lot of is people buying and holding. If you go onto the Twitter universe, you'll see a phrase HODL, which means hold on for dear life.
Nice.
And the thinking is that they buy it and hold it. In fact, I mentioned in my opening remarks my 30-year-old niece who bought Bitcoin years ago, and she's an HODL. She says, I'm going to own it. I don't know what's going to come of it, but I want to hang on to it. And she's not a fraudster or a manipulator. She's just a kid and believes in it. And, I was fascinated talking to her. And I think she represents a lot of folks that think there's something in this, I want to hold on to it.
The committee will come to order. This morning we will receive testimony from SEC Chairman Jay Clayton and CFTC Chairman Chris Giancarlo on the growing world of virtual currencies and the oversight conducted by their 2 agencies. And welcome, gentlemen. Virtual currencies are meant to act as a type of money that can be traded on online exchanges for conventional currencies, such as dollars, or used to purchase goods or services predominantly online. Additionally, developers, businesses, and individuals are selling virtual coins or tokens through initial coin offerings, also known as ICOs, to raise capital. Over the last year, many Americans have become increasingly interested in virtual currencies, especially given the meteoric rise in valuation and recent fall of Bitcoin. Just for perspective, on January 2 of last year, Bitcoin broke the $1,000 barrier, then peaked in December of 2017 at almost $20,000, and as of this morning is trading at roughly $6,900. Today, the market capitalization of Bitcoin is roughly $115 billion. This is an incredible rise given that in 2013, when this committee had subcommittee hearings on the topic, the total value of Bitcoin in circulation was approximately $5 billion. As virtual currencies have become more widespread, financial regulators and heads of financial institutions have noticed and voiced their opinions. Regulators and heads of industry have tried to educate investors so that they make informed decisions and ensure that the markets they oversee and participate in are working appropriately. For its part, the SEC has put forth many statements and guideposts to help the markets and investors. Namely, the SEC has issued investor bulletins on initial coin offerings, issued an investigative report on what characteristics make an ICO a security offering, issued several statements by Chairman Clayton on the issue, brought enforcement actions against fraudsters, and issued joint statements with the CFTC about enforcement of virtual currency-related products. The CFTC has also been helping inform the markets by launching a dedicated website on virtual currencies to educate investors, bringing enforcement actions against individuals involved in cryptocurrency-related scams, issuing several statements by Chairman Giancarlo and others, and other commissioners on the issue, and scheduling hearings on the topic. Much of the recent news about virtual currencies has been negative. Between the enforcement actions brought by your agencies, the hack of the International Coin Check Exchange, and the concerns raised by various regulators and market participants, there is no shortage of examples that increase investor concerns. It's also important to note that the technology innovation and ideas underlying these markets present significant positive potential. These aspects underpinning virtual currencies have the ability to transform for investors the composition of and the ability to access the financial landscape, thus changing and modernizing capital formation and transfer of risk. Technology is forward-looking, and we look to our regulators to continue carrying out their mandates, including investor protection, as markets evolve. I look forward to hearing more and learning more about virtual currency oversight from our two witnesses today, including what their agencies are doing to ensure appropriate disclosures and safeguards for investors. Senator Brown?
Thank you, Chairman Crapo, and welcome to Chair Clayton and Chair Giancarlo. Good to have you both here. Virtual currencies, Bitcoin specifically, have captured the attention of investors and speculators and computer programmers and regulators all over the world. I don't know how many people imagined how quickly and broadly Bitcoin and the technology it's based on would spread. It's nothing short. To most of us, it's nothing short of remarkable. To be sure, it's critical for our regulators to understand innovation and technology so that markets can grow and evolve while investors and consumers are protected. Understanding the risks of emerging technologies is no easy task, but we rely on you to maintain the integrity of these new markets and minimize the risks to Americans who want to participate in them. The volatility of Bitcoin has been also remarkable, defying attempts to think of it as a traditional currency. Bitcoin's 1,000% rise last year and 60% decline last month makes yesterday's Dow Jones record point drop look almost like a rounding error. But that growth has shown us the intersection of ingenuity and too often greed. Sometimes it appears that scam artists and hackers may understand more about the technology than most market participants. That should concern all of us. I hope our witnesses today help us understand the evolution of the markets related to virtual currencies, raise awareness of the many threats involved, and identify the regulatory gaps. Each of you has made several public statements recently explaining the threats to investor protection and the potential for abuses in virtual currency markets. I understand neither the SEC nor the CFTC has sufficient authority to police all aspects of virtual currencies. But you must make the most of the authority you have. As you both noted in the Wall Street Journal, Bitcoin mania has some analogies to the dot-com bubble of the late 90s. I hope there are lessons from that era you draw on to do your job to protect investors. In addition to the investment risk, virtual currency may be used to fund illicit activity, especially outside the United States. I know the regulatory framework in other countries, many other countries, is still in development. I'm pleased that the U.S. and FinCEN in particular has been a leader, but we can do more. I hope the chairman agrees with me the committee needs to look closely at the gaps in regulation in this area and to review our agency's ability to get ahead of the curve. As you begin to adapt to the unique enforcement and regulatory demands posed by virtual currencies, I call on both of you not to forget your day jobs, as Chair Clayton and I talked the other day, not to forget your day jobs to pursue and punish misconduct, more traditional misconduct, but very serious misconduct, wherever it might appear. That means Main Street. It also means Wall Street. I'm concerned it's business as usual when it comes to violations by the big banks. Just last week, the CFTC imposed penalties on 3 big banks for market manipulation. Good, but then decided those firms deserved waivers from bad actor provisions under the securities law. That might make sense if this were an isolated incident, but the banks in question have something like 68 violations over the last 10 years, so it's very, very serious. Too often we see big banks pay fines and move right along with little contrition and, frankly, no serious punishment. Recidivist violators won't stop breaking the laws if your agencies serve as sanctuaries. I've raised the issue of waivers over the years. I'm disappointed in your unwillingness to pursue every avenue available. It's clear that virtual currencies bring us into a new age, but that doesn't mean we overlook the basic principles of going after the bad guys and being tough when they are repeat offenders. Thank you, Mr. Chairman.
Thank you, Senator Brown. Now we will turn to the testimony of our witnesses, and first today we will receive testimony from the Honorable Jay Clayton. Now we will turn to the testimony of our witnesses, and first today we will receive testimony from the Honorable Jay Clayton, Chairman of the U.S. Securities and Exchange Commission. Following him, we will then hear from the Honorable Chris Giancarlo, Chairman of the U.S. Commodity Futures Trading Commission. And gentlemen, again, we welcome both of you here. Appreciate you coming to share your knowledge and understanding on this issue with us. And Chairman Clayton, you may proceed.
Thank you. Chairman Crapo, Ranking Member Brown, distinguished senators of the committee, thank you for the opportunity to testify before you today on the important topic of cryptocurrencies, initial coin offerings, and related trading activities. The total market capitalization of all cryptocurrencies was estimated at $700 billion earlier this year. In 2017, ICOs, initial coin offerings, raised nearly $4 billion. These markets are local, national, and international. Today, I will attempt to level set where we stand from a market regulatory perspective. My remarks may be viewed by some as overly simplistic, but they reflect how I present these issues to Main Street investors. For ease of analysis, I break this space into 3 categories. First, a promising new technology referred to as distributed ledger technology or blockchain. Proponents of this technology assert that it will bring great efficiencies to our national and global economies, including our capital markets. I hope that it does, and the Commission looks forward to working with market participants who seek to bring efficiencies, including more effective oversight, to our markets. The second and third categories are cryptocurrencies and ICOs, which are subsets of the products seeking to take advantage of the commercial opportunities presented by blockchain technology. One is promoted to be a replacement for dollars. The other is like a stock offering. Cryptocurrencies. Some of the more widely known cryptocurrencies were introduced as substitutes for traditional currencies, such as the US dollar or the euro. Those who promote these so-called virtual currencies have asserted they will make it easier and cheaper to buy and sell goods, particularly across borders. They have asserted that transaction and verification fees and costs will be eliminated or reduced. To date, these assertions have proved elusive in many areas. ICOs. From what I've seen, initial coin offerings are securities offerings. They are interest in companies, much like stocks and bonds, under a new label. Promoters use the term coin based on the fact that the security being offered is represented by a digital entry or coin on an electronic ledger, as compared with a stock certificate and a related entry in a company's records. You can call it a coin, but if it functions as a security, it is a security. Also importantly, an ICO may have nothing to do with distributed ledger technology beyond the coin itself. Buying an ICO does not mean you are investing in blockchain-related ventures. There are many problems with the way cryptocurrency and ICO markets are operating, but 2 are worth particular attention. First, the markets for these products have substantially less oversight than our traditional securities markets. To be blunt, If you are trading cryptocurrencies on a platform that looks like a stock exchange, do not take any comfort from that look. Our stock exchanges have extensive rule sets, and they are required to conduct surveillance. Also, broker-dealers who facilitate securities trading have capital and conduct requirements. These requirements and others, without a doubt, are necessary to protect those markets and our investors. Second, many ICOs are being conducted illegally. Their promoters and other participants are not following our securities laws. Some say this is because the law is not clear. I do not buy that for a moment. The analysis is simple. Are you offering a security? If so, you have a choice. Follow our private placement rules or conduct a public offering registered with the SEC. A note for professionals in these markets. Those who engage in semantic gymnastics or elaborate structuring exercises in an effort to avoid having a coin be a security are squarely within the crosshairs of our enforcement division. So what are we doing about these problems? I look forward to discussing with you that question in more detail, but we'll start with a comment on jurisdiction and a comment on enforcement. We, the SEC and the CFTC, do not have direct jurisdiction over the popular markets that trade true cryptocurrencies. This is not an oversight. It is the result of a new product and market. The traditional currency markets did not need direct regulation by market regulators such as the SEC or the CFTC. They are sovereign-backed and regulated with a long history. Cryptocurrencies, on the other hand, have no sovereign backing or oversight, and again, to be blunt, are currently functioning as assets for trading and investment much more than as mediums for exchange. Please do not view this description as a request for expanded SEC jurisdiction. If asked, we will work with other regulators to evaluate and address this issue, including our friends at the Fed, our friends at the CFTC, and the state regulators. They all have a keen interest in this market. I'll close. I know my time is short. To the extent that digital assets like ICOs are securities, and I believe every ICO I have seen is a security, we have jurisdiction and our federal securities laws apply. We will enforce these laws. Many of these laws also include private rights of action. We are working with the DOJ and other regulators to enforce these laws. Thank you for your opportunity to testify before you today. Thank you for the opportunity to testify before you today, and I stand ready to work with Congress on these issues and look forward to your questions.
Thank you, Chairman Clayton. Chairman Giancarlo.
Thank you, Chairman Crapo, Ranking Member Brown, and distinguished members of the committee. I've submitted a written statement for the record that details the CFTC's work and authority over virtual currencies. But with your permission, I'd like to begin briefly with a slightly different perspective, and that is as a dad. I'm the father of 3 college-age children, a senior, a junior, and a freshman. During their high school years, we tried to interest them in financial markets. My wife and I set up small brokerage accounts with a few $100s that they could use to buy stocks. Yet other than my youngest son, who owns shares in a video game company, we haven't been able to pique their interest in the stock market. I guess they're not much different than most kids their age. Well, something changed in the last year. Suddenly, they were all talking about Bitcoin. They were asking me what I thought and should they buy it. One of their older cousins, who owns Bitcoin, was telling them about it, and they got all excited. And I imagine that maybe members of this committee may have had some similar experiences in your own families of late. It strikes me that we owe it to this new generation to respect their enthusiasm about virtual currencies with a thoughtful and balanced response, not a dismissive one. And yet we must crack down hard on those who try to abuse their enthusiasm with fraud and manipulation. And we must thoroughly educate ourselves and the public about this new innovation, and we must make good policy choices and put in place sound regulatory frameworks to reduce risks for consumers. Putting my CFTC hat back on, I suggest that the right regulatory response to virtual currencies has at least several elements. And the first is to learn everything we can. At the CFTC, we've launched a new initiative called Lab CFTC to engage with these innovators and inform the agency about virtual currencies and other financial technology. Next is to put things in perspective. As of 8 a.m. this morning, the total value of all outstanding Bitcoin is about $113 billion, We have a slightly different figure than you have, Chairman, but close. But the point is that that's less than the market cap of one large publicly traded company, McDonald's. The total value of all virtual currency in the world is around $313 billion. In comparison, global money supply is around $7.6 trillion. And because Bitcoin is sometimes compared to gold as an investment asset, the value of all the gold in the world is around $8 trillion, which dwarfs the size of the virtual currency market. The next task is to tell the public what we learn and educate consumers. There's a lot of noise around virtual currency, and regulators must help set the record straight. The CFTC has produced a large amount of consumer education materials on virtual currencies, including written statements, podcasts, webinars, and a dedicated Bitcoin website. We've even scheduled visits to libraries and briefings for seniors. We've never conducted this much outreach for any other financial product. Another element is regulatory coordination. Because no one agency has direct authority over virtual currencies, we have to work together. That includes us, the SEC, the Fed, the IRS, the Treasury's FinCEN network, and even state banking officials. And the next element is to exercise our legal authority over derivatives on virtual currencies while clarifying our statutory limitations. To be clear, the CFTC does not regulate the dozens of virtual currency trading platforms here and abroad. We cannot require them to meet requirements like trade reporting and market surveillance, standards for conduct, capital requirements, or even cyber protections or platform safeguards. These are all standard regulations in the futures markets we oversee. Yet through our authority over commodity derivative markets, we do have enforcement power over spot coin markets. And with newly launched Bitcoin futures, the CFTC can now obtain trading data and analyze it for fraud and manipulation in 5 underlying spot markets. And that leads to the final element, and that is tough enforcement. Led by the CFTC's Virtual Currency Enforcement Task Force, we've launched several civil actions over the past few weeks, cracking down on fraudsters and manipulators, and more will follow. In closing, I want to quote something that Chairman Clayton and I wrote recently in the Wall Street Journal. These markets are new, evolving, and international. They require us to be nimble and forward-looking and coordinated with state, federal, and international colleagues and engaged with important stakeholders, including Congress. I'm glad to be with you today, and I hope my kids are listening. Thank you very much.
Thank you, Chairman Giancarlo. And I'll begin the questioning. First, I will say I've had those dinner conversations with my own children, and you're right. This is an incredibly interesting but growing new area of financial challenge, particularly among at least my children and yours. Both of you have said in one way or another that neither of your agencies have complete jurisdiction over cryptocurrencies. The question I have is whether you have sufficient jurisdiction. And I'd like both of you to address that question. Should Congress address revising and refining our financial law so that one agency or a group of agencies have complete jurisdiction? Or if you look at the jurisdiction of all agencies today, do we have sufficient jurisdiction in place today? Chairman Clayton?
Well, thank you. And in my position, you're always cautious about speaking for other agencies, so I thank you.
Understood.
For saying that we should all come to be very direct, we should all come together, the federal banking regulators, the CFTC, the SEC, there are states involved as well, and have a coordinated plan for dealing with the virtual currency trading market. I think our Main Street investors look at these virtual currency trading platforms and assume that they are regulated in the same way that a stock exchange is regulated. And as I said, it's far from that. And I think we should address that issue.
So am I hearing you say that you don't think we need to have additional legislative authorities?
I think we may. I think we may.
So first you should get together and tell us what you can and can't do, and then advise us.
I think that's a very good way to put it, Senator.
Chairman Giancarlo?
I think that's exactly right. I think the first step is to recognize where the gap is. So there is, as we both said in different ways, what we call the spot market for Bitcoin is not a regulated marketplace. Now, for us at the CFTC, we're familiar with that because we generally don't have regulatory supervision over the spot markets for which derivatives apply. That is a longstanding basis. We regulate derivative markets. The underlying markets we surveil, and we will take enforcement action for fraud and manipulation, but we don't have the ability to set the standards on those markets. And that's what we have today in Bitcoin. And unless it's an ICO, then as Chairman Clayton described, he also doesn't have the jurisdiction. So there is that gap, and I think the starting point for an informed conversation is there is that. Now, there are other elements to it. There are other agencies that come to bear on this. So state regulators, there's a patchwork of state regulation across the nation. Some states have been very assertive in this area, other states less so, and some states have nothing. FinCEN, as you referenced, has also been active in the area in terms of anti-money laundering and know your customer requirements. So there's a patchwork here, but there's not a comprehensive structure, and that's something that I think is a policy discussion, an important one to be had.
All right, thank you. And you've led to my next question. Much of the activity in the virtual currency markets is cross-border and international. And so that raises obviously the question of what challenges does that present, and what is the appropriate role for FinCEN? Both of you, I'd like to respond. I only have about a minute left, so I'll take about 30 seconds each, if you would.
I will try to be quick. The international nature of this market is why a patchwork is probably not sufficient if it's going to continue to develop as a significant market and one that our Main Street investors access. From FinCEN's perspective, there are reports that we all have heard that this currency, these cryptocurrencies, are used for illicit activity. I think FinCEN has been stepping up in that regard, and I encourage them to continue to do so.
And this challenge of global markets is a challenge that I think we face now in many regards in the 21st century. With the dawn of the internet, markets have become truly global, and not just in virtual currencies, but so many things. And it does become a challenge as we think about regulation. We certainly have had that challenge working with overseas regulators in the area of derivatives regulation as a result of the Dodd-Frank Act. The challenge of bringing these regulations together in a comprehensive whole is really a tremendous challenge for all of us. So in this area, it requires a lot of new thinking.
Well, thank you. I appreciate your remarks from both of you on these issues, and I would encourage you to form that work group, get together between yourselves, the state regulators, other appropriate federal regulators, and evaluate exactly what our regulatory structure should look like in America to deal with this, and let us know your thoughts, your further thoughts on that. I'd appreciate that.
Thank you.
Senator Brown.
Thank you, Mr. Chairman. Chairman Clayton, again, nice to see you. Last year, initial coin offerings raised about $4 billion globally. You've testified that SEC is focused on policing these transactions to protect investors. How much of that $4 billion was raised in the U.S.?
It's not clear. It's hard to get a number on that because this has been conducted on largely an unregulated basis. But I imagine, Senator, a significant enough portion where we should be paying attention.
And my understanding is during the last few months, the SEC has taken 4 enforcement actions targeting coin offers for serious violations of law. I mean, that speaks volumes about the work that the challenges in front of you. The Chairman, in response to the Chair's question, you both talked, leading with you, Chair Clayton, about agencies working together and the importance of that on this and other issues. Your testimony highlights cooperation between the SEC and CFTC, Chair Clayton, regulating Bitcoin and other virtual currencies. It doesn't mention any cooperation with the Consumer Financial Protection Bureau. Hundreds of consumers have filed complaints with the Bureau about virtual currencies. How have you been coordinating your work specifically on this, but in other areas too with CFPB?
On this area, largely through the FSOC. At the FSOC, I believe I have made it very clear my views in this area, and that this is an area that we should all be on the lookout with regard to from each of our perspectives. The CFPB is a member of FSOC, and they have heard my comments there. On an enforcement perspective, we're in the securities area. We don't see the CFPB on the securities side of this. I'm not aware of any direct coordination on a particular enforcement action, but I could check on that.
Okay. In the past few months, Deutsche Bank, Credit Suisse, UBS, HSBC have been fined over $300 million by other regulators for various forms of market manipulation. But SEC has been quiet under your watch. One study by a Georgetown law professor found that SEC has, quote, virtually stopped enforcement actions against large entities, often referred to as Wall Street firms. How do we have confidence, Mr. Chairman, that the SEC is willing to hold Wall Street accountable when the trend in penalties and actions is going the wrong way?
Yeah, I actually saw that. I saw that report. It probably doesn't come as a surprise to you that someone sent it to me. I found it annoying, to be honest, because it didn't reflect the fact that the gestation period for the cases we bring is roughly 22 to 24 months. So any type of statistics, necessarily have a latency period to them. Our enforcement division put out a report that talks about the numbers in a comprehensive way. I'm happy with that report. I'm also confident that the people who are in our enforcement division and leading it, many of them former federal prosecutors, two of them heads of the securities task force in the Southern District of New York, former heads, are pursuing our securities laws vigorously. I have no doubt. They come to work every day, and they have my full confidence.
Well, I hear you say that, and I believe you when you say that. I remember the last SEC, and it wasn't you, the last SEC under a Republican president, how they were asleep at the switch. So as the chair of the governor of the Richmond Federal Reserve used to tell me, watch us and let us know you're watching us. But I'm further troubled by a statement by one of the SEC's enforcement co-directors last fall that SEC might lose 100 of its enforcement staff by not replacing those who leave. Compared to 2016 figures, this would reflect a 7% reduction in enforcement headcount. So how are you going to stay on top of developments in virtual currencies and the other enforcement, all the other areas that we just talked about, and to be able to fight traditional misconduct? How are you going to do that when you're not replacing them, if in fact that's the case?
That is, Senator Brown, personnel is my biggest challenge at the moment. And we have a hiring freeze as a result of natural increases in costs, a hiring freeze, and people retiring or taking other jobs. It reduces the size of the workforce at the SEC. I could use more people in enforcement. I could use more people in trading and markets. Those are the two areas where I think the American people would get the greatest return for additional bodies.
So when you come in front of us, and I appreciate your candor, when you come in front of us and tell us that you're having trouble filling those jobs and
no trouble. I'm not. I just can't.
Well, okay, I guess trouble that way. All right, because of the freeze. Isn't that message to those who want to game the system and those who want to defraud the system? Isn't the message as the SEC is not the cop on the beat that even the new chair wants it to be?
Do I want more bodies to do more? Yes. Is the message that somehow we're asleep at the switch? Absolutely not.
And with your budget that's coming out, our understanding is the budget. I hope the freeze is lifted. I hope the budget is enough, and I hope that you will speak to us and ask, particularly people on the other side of the aisle, for the dollars you need and the flexibility you need to put those cops on the beat.
I think I've been very straight about incremental amount of money and where I think value can be added.
Thank you.
Senator Shelby.
Thank you. Thank you, Mr. Chairman. Chairman Clayton, you and Chairman Giancarlo, you're chairman of two powerful regulatory bodies, but you have different jurisdictions. Anything that smacks of security comes somewhere in your range, does it not? If it, dealing with a commodity, something that could be deemed a commodity, clearly comes in your range. The Federal Reserve is the biggest bank regulator we have, and also and Treasury is involved in this. How are you going to put together a task force? Can you do it on your own through the administration to deal with the cryptocurrencies? Because you got the Fed, you got the Treasury, you got the commodities, you got the securities, perhaps some others that we hadn't thought about before this gets out of control somewhere in the world.
Let me start, and
Yes,
then
sir.
Chris can
Go ahead,
comment, by recognizing the Treasury Secretary. He has brought us together.
That's good.
The CFTC, the SEC, and representatives of the Federal Reserve to talk about this, because, Senator, you're exactly right. The funny thing about these cryptocurrencies is they only work if they're integrated with, they only work for their purported purpose if they're integrated with the financial system. And so, therefore, it necessarily touches on all of our regulation. But,
Chairman?
Just reinforce that. The Treasury Secretary has been out on front on this. He has formed a virtual currency working group of ourselves, the SEC, the Fed, and FinCEN. We've had a number of preliminary conversations and work streams developed. I've had a number of bilateral conversations with the Treasury Secretary on virtual currencies, and we are going to be coordinating our various responses. It's begun with just some broad conversations establishing our different jurisdictions so that we're all clear as to what we're doing, but also what we're not doing, where the gaps are.
Do you need additional legislation in this area to both of you, or can you think you can work it, a task force together to get your arms around this without that?
I can't give you a definitive answer to that question because we should work together. But, Senator, we may be back with our friends from Treasury and the Fed to ask for additional legislation.
But, you know, we live in a virtual world. We go to the doctor and they give you a virtual examination, you know. We go here, it's a virtual, and this was not my world. I started out pencil and paper in school, as you can imagine, but in my day. But at the same time, this currency, this cryptocurrencies, they lack intrinsic value, it seems to me. They lack liquidity. Sure, people have probably made a lot of money going up, and a lot of them made money or lost money going down, but I don't know where the bottom is, if the bottom was ever reached as opposed to a sovereign issued currency. You disagree?
No, Senator. I don't know where the natural equilibrium point is in this, but I will tell you there are some economists who posit that there is a relationship between Bitcoin value and the difficulty or the cost of mining which is a process of electronically producing these, and that there are some charts I've seen that have plotted that correlation that seem to be readily correlated until last summer when the price broke free of that correlation, and that it came back into correlation late at the end of the year last year. Now, I'm not an economist. I find those things fascinating, but I'm not an expert in it. But the point the economists are making is that there is some sort of floor, that the level set is not zero, that there is some floor there tied into the cost of mining in Bitcoin. And I'm not endorsing that point of view. I'm just sharing that with you.
Chairman Clayton, do you have any comment?
Yeah, look, there are a lot of smart people who think there's something to the value of the cryptocurrency and the international exchange, and I'm not seeing those benefits manifesting themselves in the marketplace yet. And from the perspective of, look, I look at this as a perspective of protecting Main Street investors. They should understand that.
How do you put a value on cryptocurrencies? Does the market put a value on it, or does it go straight up and then straight down, or what?
Well, that's, what's something worth? It's what somebody's willing to pay you for it. But in our world, the securities world, there are rules that dictate how much you have to tell somebody about what it is you're selling them.
But part of your mandate or the security exchange is to protect the investor, is that right?
That's right.
And the chairman of the Commodity Futures Trading, he's seen, obviously, commodities just go wild at times, and your mandate is to watch the commodities, right?
Market integrity is generally perceived to be our core mandate.
You also mentioned personnel. You know, you need personnel. There's a hiring freeze on. We talked the other day about this gets in the realm of appropriations and so forth. I'm hoping that we will give you every tool you need to do your job and to hire the people that you need to execute that.
Thank you very much. Thank you.
Senator Reid.
Oh, thank you very much. Thank you, gentlemen, for your testimony. And following on the questions of Senator Brown and Senator Shelby, you do need more personnel, but very specifically, do you have the technologists, the computer experts that can begin to understand how these cryptocurrencies work, the cryptologist, and not just to sort of on a day-to-day basis sort of, give you the temperature, but look ahead and say, this is the direction it's going, which could have very significant deleterious effects. Do you have anyone like that on the staff?
The answer to your question is, we formed a cryptocurrency working group, a cyber group. They've done an exceptional job getting up to speed on this in a short amount of time and identifying some of the very issues you talk about. In an emerging area like this, could you use more horsepower? Always. You make a very good point, Senator, on looking out across the international nature of this and trying to understand where it's going to land, and do the things that people say add up. That is a very important.
Where are the technologists located? If you don't have them, I presume you don't. Is it?
We have what I would say it's a combination of economists and technologists. It's a question of, here's what the technology is, and does it make economic sense? We have those people in our economics division, DERA, and we also have some of them in enforcement, and they work together.
But you need more. Yeah, I'll take that as a yes. Mr. Giancarlo, same question. Do you have the technologists? Are you working together?
Thank you, Senator Reid. We've done a couple of things in 2017 to, as Senator Brown said, to get ahead of the curve. We hired the agency's first ever Chief Innovation Officer, someone who comes with a deep background in a lot of these new financial technology innovations. We also created something called Lab CFTC, which is our innovation hub. And you asked, where's it located? It's actually located in New York City because so much of this innovation is taking place there. We wanted to be close to these innovators to learn from them. But in terms of protecting consumers, we also formed a virtual currency enforcement task force. It was actually that task force that recently brought 3 civil actions against Bitcoin fraudsters. And as I said in my testimony, there's more to come. And as to the resource questions, we do need more resource. I used our bypass authority last year to put forward a budget request of 13% over our budget. We had been flat funded for 3 years, and we do need additional resources, and built in those resources are additional resources for fintech generally and cyber and cryptocurrencies specifically.
Let me just elaborate a bit. We continue to refer to Bitcoin. That is just one cryptocurrency. They seem to me and proliferating. That every day there's a new variety of cryptocurrencies. Some of them out and out fraudulent, some of them based on the same Bitcoin technology or processes. But just the sheer expansion of these cryptocurrencies is an issue, one. And then two, because my time is short and I have one other slightly unrelated question to Chairman Clayton, is are you tracking all these different daily emerging currencies, one? And two is, again, it goes back to my sort of step back question, is someone looking long term at the systemic effects? Where are we going to be? This is eerily reminiscent of the late 90s in derivatives, which were nominally small parts of the market that were esoteric, et cetera, and then, of course, 10 years later, exploded. So why don't you start with Mr. Giancarlo and the chairman, and I'll finish up with the chairman.
Thank you very much. So you're absolutely right. Bitcoin is one of many. However, of the many, there's really a handful that have gotten significant traction, and so that's important though for listeners to know, because so many of these are fraudulent, as you said. We went after one, and just mentioned it because I think it's interesting, called My Big Coin, which became known as My Big Con, by people that were defrauded by it. It was people that really were taking, it was a Ponzi scheme. They were taking consumers' money and use it to buy houses and furniture and jewelry. And we went after them hard, and we will continue to do that. In terms of systemic risk, right now this is still a relatively small market just by ratio, but as you say, we have to watch it and watch it carefully.
Mr. Chairman.
Yeah. So, as I mentioned, the SEC doesn't have direct jurisdiction over the pure cryptocurrencies, but we have had to watch it because, of course, they're integrated with the markets that we do oversee. And to your question of does 10 make sense or 15 or 20 make sense, I have a hard time getting my head around that, because if it's an efficient medium of exchange, 15 of them fluctuating different places probably doesn't make a lot of sense to me. But that's where I'm at. On systemic, look, I agree with Chairman Giancarlo. But if people are getting ripped off, that presents reputational risks that can have systemic effects.
Senator Rounds.
Thank you, Mr. Chairman. Gentlemen, I'm just curious. I go back to where I learned with a pen and pencil to begin with as well. And we did not have a quill at that time, but we did have #2 lead. And as I get into this and learn more about this thing, it's fascinating to see how quickly things are moving. And yet, everything that we talk about seems to translate back into dollars and cents yet. That has not changed until now. And suddenly we're talking about a new type of exchange, and it sounds almost like bartering to me. And it's a bartering which could avoid the determination of a value in dollars and cents, which brings up the question of how do you tax it if you need to? How do you recognize income? But also, in this particular case, I noticed both of you identified that you have existing resources and regulatory oversight capabilities that you are utilizing today. And while I question whether or not there are seams that have to be filled, it would appear that some basics that maybe a lot of us don't quite understand still have to be answered. And I just want to start out, because I think, Mr. Clayton, you started with this discussion with regard to the issue of whether or not you had control over an ICO, and the fact that if they were issuing, in this particular case, Bitcoin or the opportunity to market it, you had identified it as a stock or at least a value of something. What is, in this particular case, that thread that you utilize once again, and can you delve into that a little bit more about how your agency responds to the regulatory need in this particular case? What is the specific item that you look at as being an item which is subject to your review? A security in what?
The definition of a security is broad, and it includes. I'm going to not use the technical terms. There's Supreme Court cases and things like that, but it includes if you are offering me a security or offering me something, a coin, and I give you money, and the purpose of me giving you that money is to profit from your efforts going forward. So if I give you money, and you give me a coin, and you say I'm going to take the money and I'm going to grow a business, and that's going to increase the value of that coin. And by the way, Chairman Clayton, you can trade it to somebody else. So you may be able to get value for it tomorrow. In fact, you probably will get value for it tomorrow. Buy now so you can get more value for it in a few days. That's a security.
So commodity-wise, if we're looking at trading commodities, you would not have an interest in the subject of investigating or reviewing whether or not the trading of an ag commodity was something, and yet when we talk about the CFTC, we're talking about a different story where commodities most certainly are an item of interest to you. Is Bitcoin, or are these as currently being traded, are they a commodity, or are they a security, or are they both?
What's so challenging about Bitcoin is it has characteristics of multiple different things. One of the phrases that's often used is that Bitcoin is a medium of exchange, a store of value, or a means of account. Well, those three things have different connotations to them. If it's a medium of exchange, then it's like a currency-like instrument. And yet, as we've seen, a number of means of exchanges have been closed to Bitcoin. There was recently a Bitcoin conference that stopped accepting Bitcoin for registrants because they couldn't process the payments. So, but yet it's still spoken of as perhaps a means of account. And in that case, it has implications from the Fed and currency. From our point of view, when it's used as a store of value, then it's very much like an asset, like a commodity. And in fact, what we hear a lot of is people buying and holding. If you go onto the Twitter universe, you'll see a phrase HODL, which means hold on for dear life. And the thinking is that they buy it and hold it. In fact, I mentioned in my opening remarks my 30-year-old niece who bought Bitcoin years ago, and she's an HODL. She says, I'm going to own it. I don't know what's going to come of it, but I want to hang on to it. And she's not a fraudster or a manipulator. She's just a kid and believes in it. And, you know, I was fascinated talking to her. And I think she represents a lot of folks that think there's something in this, I want to hold on to it. And so in that regard, from our point of view, it's a commodity. And if there's a derivative on that, we regulate it. The problem is, in the cash market, we don't have regulatory authority, means we can't set the standards. But what we will do, and we are doing, is looking for fraud and manipulation. And we intend to be very aggressive, if nothing else, so that people like my niece can have some security that there's not fraudsters and manipulators out there, and there are far too many of them.
Thank you, Mr.
I want to go change the subject just a little bit back to Bitcoin here, or to cryptocurrencies. You know, we see in IPOs and tax jurisdictional arbitrage. Do you guys see that today in this developing cryptocurrency and also in ICOs? Chairman Clayton, you want to start with that?
Well, yeah.
And by the way, who pays for frivolous class action lawsuits? Who pays for that?
Shareholders.
Yeah. And investors, I would argue customers, employees, all of the above, right?
Yeah.
Would you answer that question for me, please?
So regulatory arbitrage is one of many issues that I see in this market. To be frank, you know, tax loss and things like that are there. Of course they are, because it's record keeping. It's difficult to trace.
So where are the countries? South Korea and China are the ones that predominantly play in this world. You said before most of the current investment comes from the U.S. I'm not sure. I don't know if we all know enough yet to know that, right? South Korea and China are really heavily invested. In fact, China now, or South Korea has a new rule that says you have to use real name bank accounts in order to trade in this.
Yeah,
and those are the kinds of things I'm asking for. Is there arbitrage really going on around the world here?
There is certainly regulatory arbitrage, but what you're making a great point, because this was a largely unregulated space across the world, and now what you're seeing is each country taking a perspective, a view, action, et cetera, which also goes to how functional is this asset class, and how would we regulate it, and how does it work? There's a lot happening that is beyond the kind of understanding of your average investor. How would you know how?
So how can we, in two agencies here, I understand there's interaction between all of our regulatory agencies, but there's also another axis here that you have to coordinate. That's the other country regulators as well.
Correct.
So I'm asking both of you, what are you seeing, and what are you anticipating we need to do to make sure, either legislatively or rulemaking, to combat that?
Chris, do you want to?
Sure. Let me jump in. I'll just identify two areas of arbitrage we're seeing. One is regulatory, which I want to come to, but actually we're also seeing price arbitrage as well. There's something known as the kimchi premium for Bitcoin traded in South Korea because there's so much interest there that it drives the price up there slightly higher. So price arbitrage. But, you know, in the early days of many markets, every American city had a cotton exchange and the prices were different there before you developed a national market. So here we have different regional and international markets, and perhaps as this market matures, if it matures, a singular price may develop. On terms of regulation, unfortunately, I think that some time ago, perhaps in the middle of last year, there was this perception that Bitcoin was off the regulatory grid. And one of the things that Chairman Clayton and I have been working so hard to do is to disabuse that notion. Now, we are limited in our regulatory authority to set regulatory standards on these underlying platforms. But when it comes to enforcement, when it comes to ICOs, we're using our full authority to drive the message. And other countries are doing that as well. And we've had frequent conversations. I spoke recently, or had communication recently with the head of the Japan Financial Service Agency about some things that were going on there. Jay Clayton spoke very eloquently at the FSB meeting recently in Basel, Switzerland. We are beginning our communication with other regulators. And I think the message is getting through that this is not off the grid. And I think part of that is now you're seeing it in the Bitcoin price. As the word is getting out that we will go after misconduct, I think you're starting to see that reflect in the price, and I think that's an important step.
Well, what little time we have left, I'd like both of you to respond to the pump and dump efforts that are underway right now. You see this beginning to develop. Can you, I know you're both involved in this, can you both address what your agencies are doing to combat that?
Senator Perdue, this is one of the things that I'm worried that investors don't understand, which is when you have an unregulated exchange, the ability to manipulate prices goes up significantly. And you know, just a few coordinated sales can change a price.
Or an email, a fraudulent email.
Correct. Yeah.
I've mentioned we formed this virtual currency enforcement task force. I mean, we've got some really good people on this, and we've brought 3 actions in the last few weeks. I said there are more to come. There are more to come. We are digging deep and learning a lot and seeing a lot, and I don't want to get ahead of that other than to say that we are working the beat hard right now.
And you have jurisdictional right to do that, right?
We have enforcement jurisdiction. Yes, we do.
Great. Thank you, Mr. Chairman.
Senator Donnelly.
Thank you, Mr. Chairman. Thanks to both the witnesses. And this would be to both of you. Now that the SEC and the CFTC have asserted jurisdiction and warned the public of the risks posed by virtual currency operators, what other ways can your agencies prevent retail investors from falling victim to fraud and manipulation?
Yeah, I'm happy to take this question, Senator. Earlier, Senator Ranking Member Brown mentioned what are we doing with the CFPB. We've actually formed a partnership with the CFPB to consumer education in the area of Bitcoin. One of the things I've learned recently is that America's libraries are a place where a lot of people go and research Bitcoin. In fact, they use the library computer as one of the most frequently searched items from a library computer is a Bitcoin. And so we're teaming up with CFPB to go out to America's libraries to educate librarians who often get some of the questions asked, to be able to direct library patrons to use our resources, our Bitcoin website and our other resources. So we are really getting very creative in the area of consumer education. I've mentioned we've got several podcasts on this subject, which are with thousands of downloads. We are working as hard as we've ever worked. We've never done as much work on consumer education as we've done with virtual currency.
We also have an Office of Investor Education that has been engaged with a number of groups on this, and I think they've done a terrific job getting the word out. In terms of getting the word out, though, there are financial intermediaries and other actors that we're counting on to act responsibly in this area.
Okay.
Deal with their
well, let me ask you a follow-up, and it goes to the point you just made about the libraries and others. Are you concerned that retail investors will remain vulnerable to fraudulent and manipulative online solicitations that are sometimes more difficult for you guys to pick up?
Senator, in the broad range of marketplaces, seniors seem to be the prey of choice for fraudsters and manipulators, whether it's in precious metals, whether it's in foreign exchange, whether it's in a whole range of products. We see and we prosecute continuously fraudsters who seek to prey on either the less sophisticated seniors who maybe don't quite have the retirement nest egg that they believe they need and fall prey to get-rich-quick schemes or schemes that say we'll guarantee 100% returns and all kinds of nonsense like that. And it's a big part of our enforcement effort at the agency.
Let me ask you this, and this goes to perspective and to hopes and dreams, but what warnings would you give? There was an article in the Washington Post yesterday, and it was about good, hardworking Americans, people who have worked really hard and want to have a pension. It was about a group of our friends and neighbors from Kentucky. And the title of the article was, "Bitcoin is My Potential Pension." What would you say to them to help protect them from winding up in a situation a few years from now where it didn't quite work out the way they were hoping?
It's such a troubling development, Senator, unquestionably, which is why we're putting out so much materials. But what I would say to them is it's the same advice I'd give my children. If it sounds too good to be true, it is. If they're promising ridiculous returns, they're ridiculous. If you are going to give them money, you'd better be prepared to lose it.
I agree with everything that Chairman Giancarlo said. I also would say this to them, which is there are things like disruptive technologies that come along, but they shouldn't disrupt the way you look at markets for us or the way you look at investing. Pumping all of your money into a disruptive technology has a very high likelihood of not working out for you as an individual. When we see disruptive technologies come along, there will be winners, but there will be many losers. Okay. That's the way it works.
Let me ask you one other question. How can both of you best assist law enforcement and federal authorities to ensure these virtual currencies are not used by terrorist groups or nations like North Korea to evade sanctions?
So we work very closely with law enforcement. We recently commenced a program with the FBI where we actually have FBI agents on secondment with our agency in order to look at this. At the end of the day, the use of these cash markets for that, it's going to require cooperation amongst multiple agencies, especially with FinCEN, who often, because of their anti-money laundering operation, may see some of these issues before we can, and then bring our expertise to bear and coordinate with our law enforcement agencies.
Same here. I would supplement that with we also have a dark web working group that tries to monitor what's going on in that space in order to identify these types of issues.
Thank you, Mr. Chairman.
Senator Kennedy.
Thank you, Mr. Chairman. Welcome, gentlemen. I think you're both doing a terrific job. Chairman Giancarlo, when is the last time you bought a stock, exchange-traded fund, mutual fund, or a bond?
So I hold generally traded funds.
Yes. When's the last time you bought one?
Well, probably before I pretty much put my investing.
A year ago?
Well, probably before I started at the commission.
2 years ago?
Yes.
Okay. When you bought it, what'd you buy? Equity or bond?
Index funds, mostly.
Index funds, okay. When you bought it, did you sit down and read the prospectus for the index fund?
Well, I'm not supposed to say this as a lawyer. I'm not supposed to say that I probably didn't read it cover to cover, but I will confess that I didn't read it cover to cover.
How many investors do you think do that? Don't read it?
I think most.
Okay. So what's the point? I mean, we're talking about all the dangers and the risks of cryptocurrencies like Bitcoin. I'm putting aside the shyster fraud issue. I mean, what's the point of all this over-disclosure if nobody's reading it?
Well,
and why do we want to do the same thing with Bitcoin?
I'll say historically it's been one of the foundational principles of our securities laws that adequacy of disclosure, full disclosure, is one of the building blocks. I will tell you, having been in business, that most business people will tell you they study the prospectus only to see what they can sue on if they need to sue on something if something goes wrong.
I mean, I think you see where I'm going. I'm going to ask you both a philosophical question in a second about how far you think we ought to go to protect people from themselves. But I don't think the disclosure we have right now works. I think it's good for the lawyers, and it's good for the financial advisors. But I think we over-disclose. And I think you can, I'll bet you each have a smart lawyer on your staff. You could go to them and say, write me a good disclosure for Bitcoin. And you would get it back and look at it and then pick 50 names from the Washington, D.C. phone book and ask them to come in and say, read this and tell me if it makes sense to you. I mean, what's the point? How far do you think we ought to go here in terms of cryptocurrency? I'm separating this from the blockchain technology. I mean, China outlawed it. So I think South Korea has too. What are you suggesting, that we just go after the shysters and fully disclose? I mean, is that what you think we ought to do?
Well,
Secretary,
yeah.
or Chairman Clayton?
Senator, I think that is exactly the question we're here to pose and take forward, which is, what is the right way to deal with this new technology? I'm not, as just a person watching it, I'm not satisfied when I see people thinking that these trading platforms of cryptocurrencies have the same kind of protections that a stock exchange would. And I'm very unhappy that people are conducting ICOs, like public offerings of stock, when they should know that they should be following the private placement rules unless they're registering with us. Those two things make me unhappy. We're figuring out how to deal with them is why we're here. I agree with you that we should be careful not to go too far. But for me, just to be clear, for me in this ICO space, it's pretty clear that when people are violating our securities laws work pretty well. Disclosure can be improved. It can really be improved.
Well, let me make this suggestion because I don't want to go over. Last time I asked questions, I got a little carried away. I think I went over 3 minutes. And our ranking member put me on double secret probation. So I'm not going to do that today.
Like I have the power to do that.
He does. The disclosure, I mean, you can extend the disclosure we have now to Bitcoin, and you haven't done anything. I'm not suggesting we shouldn't have disclosure, but you got to have disclosure that makes sense and helps people other than the lawyers.
I agree, Senator.
Senator Warner.
I usually agree with my friend from Louisiana. But I think we may be on top of something that is transformational. And I don't think you can separate the underlying distributed ledger or blockchain from some of these crypto assets. And if we had the same rate of increase that the next 2 years that we've had the last couple of years, we're talking now a couple $100 billion, we'd be at north of $20 trillion caught up in this area by 2020. And I think I remember back, I was lucky enough to get in the cell phone business back in the early 80s, and everybody thought it was going to be a small business, and they were wrong, and I got rich. I think we're looking at the same kind of transformation about to take place, and we are going to have to wrap our arms around it. We've talked about some of the consumer protection issues, but we've got money laundering issues. We've got cybersecurity issues. A third of the Bitcoin exchanges have been cyber hacked between 2009 and 2015. I'm not exactly sure what the right regime ought to be, but I would argue that, while I commend the Treasury Secretary for putting a working group together, I would argue this is the reason we created FSOC in the first place, that this rises potentially to the level of a systemically relevant event. And I'd just be curious whether you believe, and I commend what both of you are trying to do, but whether this ought to elevate to an FSOC level analysis.
So, Senator, I had the same question you had, which is there's a big rise here. If it does keep going, is this a systemic issue? Which is one of the reasons we brought it up at FSOC, talked about it at FSOC. I again commend the Treasury Secretary for forming the working group. I want to go back to separating ICOs and cryptocurrencies. ICOs that are securities offerings, we should regulate them like we regulate securities offerings. End of story.
Let me make sure, because I've got a couple more points. Thank you, Senator. Just real quickly, on the issue of disclosure, sometimes what we're seeing is not a problem of absence of disclosure, it's false disclosure. And false disclosure is often fraud, and I think we need to step in there. But just in terms of discussion, as Chairman Clayton mentioned, we have begun discussions at FSOC. In addition, there's also been discussions led by Chairman Clayton at the Financial Stability Board and also at IOSCO, which is the International Organization of Securities Commissioners. So these discussions are taking place at the right levels of debate, but there's so much more to be done.
But, and again, to my friend from Louisiana point, we've got this, we're focused a lot on Bitcoin and crypto assets, cryptocurrencies, and I think there's even definitional issues here. But you've got a whole new platform called Ethereum where they're creating, file sharing or extra computer time. I'm not sure what kind of assets those fall into. Are they potentially regulated within your realm, or if there is a trading exchange, a tokenization exchange between excess computer time? I'm not sure where that fits at this point.
The definition of a security, I believe, the people who wrote the 34 Act and the 33 Act, they were smart. They did it on a principled basis, and they basically said, if you're giving people money in exchange for a future development of a business with the hope of a return, and whether that return comes in the form of server time or your ability to sell server time, it's a security.
But there are been, and I concur with the approach you've taken in terms of the ICOs, and I think there's been some very bad behavior. Yet certain ICOs, the SEC has not stopped, others they have stopped. And are you going to go back and re-review the ones that have gone forward?
Let me say another thing about the 33 and 34 Act. When they were written, there was a great recognition that there was a tremendous amount of securities activity in this country, and that we were going to rely on gatekeepers to help us enforce those, and liability to help us enforce those rules. Accountants, lawyers, underwriters, sellers, and the like. I'm counting on those people to do their job, and I've made that clear.
Let me ask Chairman Giancarlo, what we did, and one of the things I'm concerned about was that I think we may have moved too fast on allowing, for example, futures trading on Bitcoin. And I would just wonder, you've allowed future trading contracts on Bitcoin, yet the SEC has not allowed ETFs. I'm just worried that we need a much more coordinated effort, because I think the potential writ large amongst crypto assets and the underlying blockchain could be as transformational as wireless was years ago. And I think we're going to need a much more coordinated effort. I know my time's expired, but if you could both quickly comment on that, I'd appreciate it.
I believe it is critically important that we coordinate on this. I believe that we are all both individually and collectively understanding our authorities, understanding this new technology, working around it. There was a communication amongst myself, Chairman Clayton, the Treasury Secretary, and others in connection with Bitcoin futures. And Bitcoin futures are quite different than the Bitcoin market. The Bitcoin is an anonymous area. Bitcoin futures is fully transparent to the regulator. Bitcoin retail Bitcoin futures, mostly institutional and high net worth. Bitcoin futures regulated. Bitcoin futures regulated, Bitcoin unregulated. And with Bitcoin futures, we're now having visibility into underlying spot markets and data from those markets that we would not otherwise have.
Completely agree on coordination. Like I said, I break it down into 3 areas. There's this great technology that I agree with you has promise. There are these pure cryptocurrencies, which we need to take a look at across FinCEN, Treasury, CFTC, Fed, and then there are securities offerings that are called ICOs that should be undertaken as securities offerings, consistent with our regulatory regime.
Senator Cotton.
Thank you, and thank you, gentlemen, for your appearance today. I want to continue on a line of questioning that Senator Warner began. So putting aside Bitcoin or other kinds of cryptocurrencies that are based on blockchain or distributed ledger technology, what are your thoughts on the potential value of that underlying technology of blockchain and distributed ledger technology, both to enterprises and consumers and perhaps to government agencies?
It's important to remember that if there were no Bitcoin, there would be no distributed ledger technology. It grew out of that technology initiative. And the potential applications, and by the way, I'm no pie-in-the-sky dreamer. I just report what I read, but the applications range from enormous potential in financial services industry and the banking industry, but right down to the way charity dollars are spent, the way perhaps refugees are accounted for across the globe. There was an article just this morning about the use of distributed ledger technology for 2.5 billion people around the world who don't have access to banking services. One of the areas that, in our own area of agriculture futures, 66 million tons of American soybeans were just handled through a blockchain transaction by the Dreyfus Company for sale to China. So Bitcoin is now being used. It's used in our American transportation and logistics system. And most importantly, the potential of distributed ledger technology for regulators to be able to do really close market surveillance. And if it had been available in 2008, if we had been able to see the counterparty credit exposure of one bank to another bank in real time with precision, that would have enabled much more precise policy choices that had to be made in a rush without good data. So I think distributed ledger technology has got an enormous potential. Now, how it will be realized, when it will be realized, what are the other challenges in it, those we can't say, but the potential seems extraordinary.
Thank you. Mr. Clayton?
I agree that the potential seems very significant. And just look around anywhere in our economy where verification and record keeping has cost that is potentially reduced is an opportunity for this technology. That's just one of them, and I hope people pursue it vigorously.
Thank you. Let's turn our attention now to cryptocurrency and to Bitcoin, since it's the most prominent. Yesterday, the Dow Jones had its single largest decline in a point scale, 4.6% as a percent, which is high, not the highest ever. That obviously generated a lot of news coverage. The dollar has faced 2% inflation or less now for many years. Bitcoin, however, has seen a 32,000% increase in its value over the last 5 years. It's declined by some 60%, I think, in just the last 30 days. What are the factors driving that kind of extreme price volatility in Bitcoin relative to securities of public traded companies or the U.S. dollar?
Well, just recently, the volatility we've seen in Bitcoin was not as large as volatility we've seen in some other asset classes, such as the VIX product, which is known as the fear index, a volatility gauge. And so we have seen extraordinary volatility in Bitcoin, but in our world, in commodity derivatives, we're used to volatility in asset classes, and that's one of the things that the emergence of a futures product is meant to do, is to provide those who are exposed to that volatility a means of hedging and mitigating the risk to that volatility.
Mr. Clayton.
I don't really know what's driving the volatility in Bitcoin and cryptocurrencies. It's they're not correlated with sovereign currencies, so it must be something different from what would drive the dollar. But that's one of the issues before us, is there does appear to be a lot of volatility compared to the medium they are supposed to be a substitute for.
So what does that kind of volatility portend for cryptocurrencies' future as a potential alternative to legal tender of nation states, or in the EU's case, a transnational organization?
You raise a great point. Now, maybe that volatility tamps down to a stable, but an asset that is highly volatile is not a very effective means of exchange, because you don't know how much you're getting by the time you receive it, or how much you're paying at the time you have to pay it. If you agree a price on day 1 but have to source it on day 10, you expose yourself to significant risk.
Let me ask you this. We've seen a dramatic increase in the number of initial coin offerings where private companies are using digital tokens to raise money instead of going through the capital markets. The Wall Street Journal reported that initial coin offerings grew from about 96 million in 2016 to over 4 billion in 2017. Many of these ICOs are relying on celebrity promoters to gin up the sales. For example, last year, Floyd Mayweather, the boxer, used Instagram to promote the purchase of Centra tokens. Now, I've done extensive work on consumer protections in the prepaid card space, where we've seen celebrities like the Kardashians use their status to sell products that come at a steep cost to consumers. And this feels eerily similar to that, just the next avenue of exploitation. And I worry about unsuspecting investors that don't have the resources to understand the true risks. What can the SEC do to better protect investors who may be persuaded by celebrity promoters to purchase tokens offered in initial coin offerings without fully understanding the risks?
Senator, I'm not going to comment on a specific instance, but
I'm talking about broadly.
Some time ago, we put out an alert that said, if you are promoting securities, you're taking on securities law liability. I believe that has tamped down some of this endorsement activity. I will say it again right here. If you are promoting securities, you're potentially taking on securities law liability.
Well, let me ask you, I appreciate that, and I hope that you will think about doing more to protect consumers. Can you walk us through why the SEC at this point is not comfortable with approving ETFs with significant investments in cryptocurrencies?
Our ETF product space is largely a retail product space, and we've made it clear to the marketplace that there are a couple of issues with having an ETF that's based on a cryptocurrency. They go to price discovery, custody, and some other issues around volatility. We've let the industry know that those are issues that are of concern to us, and that we don't want to approve an ETF product with a cryptocurrency underlier until we can get comfortable with those issues.
Thank you, Mr. Chairman.
The issue of, you may have answered this question just now with Senator Menendez, Mr. Chairman, Chairman Clayton, but you indicated why you were reluctant or unwilling at the moment to approve an ETF proposal. But doesn't ETFs, just as options do on its exchange, mitigate the concerns, reduce the volatility, and increase price discovery and reduce risk? So additional products, my question really is, don't additional products help alleviate some of the challenges that we face, or is Bitcoin or cryptocurrency so unique that it's different than other items that are traded on exchanges?
Yeah, I think that the CFTC product has that effect. It's largely an institutional product, and you can take both sides of the market, and it gives people a chance. ETFs, you can take both sides of an ETF, but predominantly they're offered for a long investor, someone who wants exposure to the rise and fall of Bitcoin or other currencies just as it would. And that's a different dynamic than a futures product. And we've long taken an investor protection view of approving those types of products, which is embodied in our liquidity, custody, and pricing rules. If we get comfortable with those rules, then we can move forward.
With that, this hearing is adjourned. Thank you.